Hello, I'm Mortgage Mike and welcome to your weekly mortgage industry update. Today's topic is on QRM. I wonder what QRM is. Well, a QRM was nothing prior to the no income, no asset, stated income, stated asset, fog and mirror liar loans that we used to make several years ago. A QRM is what is called a qualified residential mortgage, and it's a wonderful piece of regulation that's coming out of the Dodd-Frank bill. So, what is a qualified residential mortgage and what does it mean to mortgages and selling homes? Well, it means a lot because a qualified residential mortgage is what is referred to as a risk retention or skin in the game regulation. And what the requirements around it is that if you do not meet the qualified residential mortgage parameters, then as a mortgage originator, you have to put 5% of the loan amount into a risk reserve. So there's your skin in the game. For any mortgages that you originate. So let's define what a qualified residential mortgage is and let's talk about what that means to us in the home mortgage origination and home buying and selling arena. So a qualified residential mortgage is defined as any loan that has a 20% down payment, 28-36 ratios, and no late pays in the last 2 years on the credit report. That's a qualified residential mortgage, which means that you do not have to meet the risk retention requirements of 5%. Okay, pretty scary. Not many mortgages meet those requirements today. So now there is an exception that's granted, and that exception revolves around FHA VA loans and Fannie Mae and Freddie Mac loans. Now, obviously this is just a regulation that's being proposed right now. However, when we begin to look at Fannie and Freddie coming out of government conservatorship, what happens to a QRM at that time? Does Fannie, do those loans still qualify or do they not? So the big issue that we run into is this. One, in the state of Texas and especially Houston, we're going to have an issue with our jumbo non-conforming loans. That's right out the box. If this qualified residential mortgage piece comes into play, we're going to see the cost of financing for jumbo loans just increase. And it has to, because you're putting 5% of your risk 5% risk retention is just going to jack up the cost of mortgages. So the thing that we need to watch out for is how does this affect the conventional mortgage market and us ultimately, because let's face it, our loan amounts are typically below the 417 conforming loan mark, and we don't have a ton of non-conforming jumbo business out there, although there's some of it. So keep an eye out for QRM. You will hear more of this in the future, and if you feel like it's or hear that it's impacting our industry or our business or your business, I highly encourage you to contact your legislatures and let them know that QRMs in the conforming mortgage market, if we don't get this exemption, is going to kill the housing industry. So I'm Mortgage Mike saying thanks for watching. Spread the love, heal the world.